Okay, we're at the top of the hour, so we'll get started. For those of us joining as guests, thanks for hopping on the call and checking out our webinar, Fostering Generosity, Philanthropy for Today and Beyond. I'm your host, Greg Wood. I am a financial advisor with Raymond James out of the Cochrane branch. And I have today a couple of guests with me who I'll introduce shortly. I just want to mention quickly. There is a Q&A button at the bottom of your screen, and anytime throughout the presentation, feel free to hit the Q&A button and you can type in your question, and I will get to um, reading those and getting some answers for you at the end of the presentation, which I'd like to ideally keep the presentation on the shorter side and have more time for just general discussion and fireside chat if we can. So please send all your questions in, and that'll give us some good topics to go over. I have with us Peru Nair. She has extensive experience with high net worth clients and advisors in international wealth management. Before joining Raymond James in September of 24, she worked for an ultra high net worth family, crafting their strategic philanthropic plan across various international jurisdictions. She studied law at the University of Mumbai and completed her postgraduate studies in international development, focusing on social innovation at the University of Edinburgh. She is also an international human rights lawyer and trained at the University of Oxford. So we're in some good company today. Also joining us from Raymond James Solus Trust Company, we have Craig Colson. Craig is based in Calgary, Alberta. He brings over a decade of experience in trust and estates with extensive experience in fiduciary services and wealth management. He provides estate trust and incapacity planning services to clients in Alberta. Prior to joining Solus Trust, Craig had an estate and trust consultancy role with one of the bank-owned trust companies in Alberta, where he also served as a senior trust officer, administering estates and trusts. Craig's practical knowledge in trust and estate matters was further developed over his 11 years as a supervisor with the Public Guardian and Trustee of Alberta. Known for his thoughtful approach and deep understanding of trust structures, Craig delivers tailored solutions that align with clients' long-term financial goals and estate planning needs with a strong commitment to integrity and client service. Craig works closely with individuals, families, and professionals to navigate complex trust arrangements and ensure the seamless administration of estates. His expertise spans intergenerational wealth transfer, philanthropic planning, and corporate trust services. He holds a Bachelor of Arts from Simon Fraser University in British Columbia and is a member of the Society of Trust and Estate Practitioners in Canada. So, welcome, Craig. I'm going to pass it over to you guys to start going through the slides, and I will just mute my audio and turn my camera off so I can enjoy the show as well. And I will pop back up here at the end to start going through those questions. So, take it away, and thanks again for hopping on to discuss this stuff with us today.
Indeed. Thank you so much for having us on here today. And I don't know if people did hear me, but I have lost my voice a little bit. So I do apologize in advance for my really hoarse voice this morning. But Craig and I have put together a quick sort of snapshot of charitable giving and estate planning consideration for charitable giving as you sort of go through this process with Greg. The agenda for today is a little bit about the charitable landscape in Canada. We also want to go through the why and the how of giving. Transfer of wealth, which is something that we are seeing so much with the aging population in Canada, and philanthropy and how that plays a big role. We also will speak to a little bit about strategic charitable giving, donor advised funds as a financial vehicle, indeed the tax benefits of giving, because that's why we're all here to optimize that too, and estate planning considerations. And at the end, as Greg mentioned, we will have time for Q&A. Over to you, Craig.
Hi everyone. Looks like everyone can hear me okay. My voice is so far so good, so that's good. Can you hear me okay, Peru? Okay, good. Um, so we have some data that as you can see from the bottom of the slide here, is from Canada Helps. It's a giving report in 2025, and you'll see at the top it's entitled 2023. So it's just the nature of getting these statistics. We get it from CRA, and it's 2 years behind, but I think it's helpful to have a look at um, charitable donations and the track it's taken. There was certainly a dip in 2020 that we saw during the pandemic in terms of charitable donation, the amounts of gifts from Canadians. Um, but 2023 was a great year. As you can see, the charitable donations grew by $1.35 billion, which was uh, in terms of the year-over-year increase, it was the largest year recorded in terms of the absolute amount of gifts. It's interestingly in that in that year, 95,000 more Canadians claimed charitable donations in 23 than the year before, which was again a significant increase. But when we dive down and look deeper into the numbers, you can see over on the right side of the screen that it's generally the Canadians that are over 65 that account for 35% of all the donors and 50% of all the donated dollars. So there was a decline in the percentage of Canadians who give, and we're seeing sort of an increasing reliance on a smaller group of aging donors across the country. And that does result in some funding shortfalls faced by charities across the country. And when we get to the next slide, we could talk or see some numbers in terms of the number of charities that rely. And here we go. I see it now in front of my screen. The sheer number of registered charities in Canada. You'll see in Canada, there's 85,000 approximate registered charities in Canada. Um, but most of these charities are quite small. In fact, 77% make less than $500,000 in revenue a year. Excuse me. And 59% of them have no full-time staff. And those that do employ full-time staff, 90% of them employ 10 or fewer. So there's a lot of charities out there. A lot of them are quite lean, clearly, and rely a lot on uh, volunteer staff, which certainly helps in terms of the amount of funds that's available for gifting. Um, in terms of what these charities spend on money, spend in the charitable sector, 1% is on fundraising. They do need to raise money for their charities. Really, only 8% is on administration, 5% on other expenses, but for the most part, 86%, that's a pretty high percentage, are used for charitable activities. Um, and when you look at the sector generally, charities employed 10.7% of the full-time workforce in Canada in 2022. So it's a pretty big industry. So in terms of why people give, you can see that when we look at these numbers, this is broken down to the under 65 age group, 65 to 74, then 75 plus. If we start at the very bottom there in terms of a tax credit, and that's what a lot of people, that, that's one of their goals. You can see that as you get older, 75 plus, 41% of those in that age range are looking towards a tax credit. And we'll talk a little bit about why that is when you look at the estate planning benefits of gifting when you're looking at a wealth transfer. Um, Similarly, religious obligations, for the under 65 crowd, it's not as I guess important or something that they flagged as one of the reasons for giving. But as you get older, it becomes more of a factor. Um, if we go above and we talk about gifting, a lot of times it's someone gets asked by a friend, family member, a neighbor, or colleague. We see that in the workplace. That's a big driver of people giving, and that's the reactive giving that we see a lot of times when we're approached to give money, as opposed to a more strategic type of gifting that we'll talk about in a moment. And then we have other reasons. They're personally affected by some cause. They want to make a contribution to the community, a personal belief in a cause. So that's always been quite big, and that's those drivers at the top for the first three or four items there are the main drivers, and there's not a huge difference between age groups on those, but those are big.
In my sort of move to Canada, I think the compelling aspect of the data that was just presented by Craig is the fact that Canadians are truly kind. The reason why they're donating is due to compassion and due to
Mhm.
personal belief in causes rather than tax being the main driver
Mhm.
of giving. So, and that's why we want to present this data set to you. It's from the 30 years of giving in Canada by Imagine Canada. So all of the data sets and the research is linked below. So when Greg does circulate the deck to you all, you can look into that research as well. Moving ahead and shifting gears a little bit, I just want to talk about buyer behavior, and this is something that most of us experience. So I can speak to it a little bit in my personal experience of moving to Canada. I was moving from the UK, not so cold, pretty wet, but not so cold. Moving into Canada, I had to buy a winter jacket, right? And I went into, okay, what do I buy? There's a lot of problem recognition. I needed to be windproof, waterproof, snowproof. And I did a lot of research. I evaluated a couple of brands, a whole bunch of brands, went and tried them on. And then I bought the jacket. And the jacket prices range from $2,000 up to $500. And there's so many options out there. I spent a little more than I should have. And then I had a lot of what we call buyer's remorse. So the buyer cycle is quite akin to what a charitable cycle is also, where sometimes you donate to charities and then you have a sense of resentment that maybe you shouldn't have donated that much to that particular charity, especially when you're in a tax scenario where it's a huge tax event in your life and you donate out a large amount of money to one or two charities. And 5 years down the line, the charity starts doing work that doesn't resonate with you, but you cannot change that decision that you took. To go into a little bit of what this means and what I'm trying to link to is what kind of charitable investor are you? Are you reactive in nature or can we turn that into proactive? And most of us are reactive givers. Like Craig mentioned just previously, we're always reacting to some kind of fundraising. You land into the Calgary airport and you're seeing, signs for the Calgary Food Bank or the Calgary Community Foundation or the Calgary Opera. And we are all reacting to some kind of fundraiser that comes by mail to us, is in our post box, comes on email to us. More often than not, all giving is campaign driven. Now, the idea is to change it from reactive in nature to proactive investment. How can we think about multi-generational change in making in societies and communities with the elders changing and leading that theory of change perspective, as well as really paving the path for what the world should look like or what the world ought to look like for generations to come? How can we preserve and ensure that the earth as we know it is preserved for generations to come as well? So it's thinking a little bit more about what your value systems are and diverting the giving to that in a proactive manner, creating a strategic plan around it. So most giving is sort of two in nature. There's either direct giving, which is what most of us do, where we react to a campaign, there's a one-time decision, and there's no further involvement. The other type of giving is strategic planned giving. So where you're planning to give to maximize impact as well as your charitable investment holdings. Structured giving to facilitate ongoing involvement, where you are also working with an organization to ensure that the what you'd like to see as a change in society is being done by through them, where programmatic or operational excellence is achieved in charities through your donated dollars. There are two options here when you want to kind of get into that strategic planned giving aspect. It's either a private foundation or a donor advised fund. Now, a private foundation is what any of us know as a private foundation. Once you reach a certain level of wealth, you create, a lot of individuals do it, where they create their own private foundation. Now, I must warn you that it is an insane and Herculean amount of administrative and regulatory work. In my previous role, I was at a private family office. We had multiple private foundations in various international jurisdictions. And despite the amount of endowed dollars, way north of 100 million Canadian, it was still an administrative challenge because the regulatory requirements, the filing requirements, the audit requirements all adds up. And moreover, you would need to have, personnel and human resources who are in there ensuring that these dollars or pounds are being put to good use. The other thing to think about is how can you create that legacy beyond your lifetime, either if you go a private foundation route or a donor advised fund route. Now, a donor advised fund is a sweet middle spot from reactive one time giving and a private foundation. A donor advised fund, and we'll go into it a little bit more in detail in a couple of slides, but it's a financial vehicle that is the fastest growing financial vehicle in the world for private philanthropy, for personal philanthropy. A little bit about Total Wealth Solutions, because this is the firm's offering and what Greg does. You, as the client, is in the center of the wheel, and the advisory team is around it. Um, we also have all of these offerings, which really become the spokes of the wheel for what Greg offers you as his services. And charitable giving is the pink spoke, and you can see the green spoke is estate and trust services. Craig, I think I may have taken over your slide. I do apologize.
It's all good. It's all good.
So yes, and this is what the Total Wealth Solutions offering is, and that's why. So Craig and I are part of the spokes of the wheel of Greg's business. The name being so similar is so difficult to go through in a presentation as well. Over to you, Craig.
Thanks, Peru. Yeah, no, no, it's important for you as clients to know, that you are the center of that wheel, and then the resources that are brought to bear uh, on your particular situation is greater than what Greg's office has. He can draw upon the resources that you get from being a Raymond James client, which is the Total Wealth Solutions team. And so, as Peru says, there's the charitable gifting area. There's estate and trust services where I sit. We also have a tax solutions team. Um, of course, investment management. That's Greg's bailiwick, right? We also have insurance experts and financial planning either within the office or external. So you do have lots of resources available to you. So that's part of what we do. We're parts of the spoke. So if we move to the next one, there we go. So the Raymond James Canada Foundation, um, this is where the strategic gifting kind of comes in. It's as it mentions in bullet one, it's a private foundation established in 2012, so it's been around a while, to facilitate and nurture the philanthropic work of Raymond James Limited. And I think it started initially to be an employee driven private foundation where employees could give. And then we thought, um, let's expand this to clients reach as well. Um, so it receives funding from both sides. Oh, there we go. Bullet two. The foundation grew to the existing charity work of Raymond James employees, and it continues to make positive impacts in the communities year after year. Um, and really, the initiatives are to support community engagement. I must say, um, we were really pushed as employees to because of the culture and values of Raymond James to support that community engagement. I know I've been out in the community myself. They support certain days where we'll give back to certain community initiatives such as the food bank or brown bag for kids or the Humane Society. It can be all kinds of different things. So it's quite a great organization. both for employees and for our clients. And really, the key word here in that last bullet is the simplification of strategic charitable giving. Um, and we offer the personalized solutions, and that's the benefit of the donor advised funds, which we'll talk a little bit more about as well in terms of how it can be created and how quickly, quite frankly. I actually have some stats here as I look over to my other screen. And maybe you could help me make sure I've got this correct. So since inception, um, there's 45 billion dollars, I think, plus of donations that have been made to the foundation. And in 2022, the employees of Raymond James gave 2.3 billion. Is that right, Brew?
Million.
Million, I'm sorry. Um, but so, and the foundation itself, the numbers were 4.2. So if you add those two together, 6.6 million in just in 1 year, the 2022 stats. So
Yeah, and I can speak to a little bit about the 2024 stats. We granted out 10.4 million, and this is going to come up in the latter slides from our donor advised fund program. So, as clients of Raymond James, what we offer from a foundation perspective is a strategic charitable giving advice, and to ensure that, we can customize the solution for your personal philanthropy. As Craig mentioned, what we want to do is simplify your giving. Truly, the greatest privilege of wealth is to be able to reach a standing in society and a place in your capital and personal wealth to be able to give back to the communities that you're from and to the province you're in and to the environments that you're, part of. Something that's incredible about the Raymond James Canada Foundation is that we are coast to coast because Raymond James is coast to coast. And therefore, our employees being present coast to coast, we're making that impact in society, in communities across Canada. And by helping our clients who are across Canada, we're almost doubling our impact, tripling our impact, just ensuring that we're giving back and doing it right with a game plan in mind. So I did mention a donor advised fund a little while ago, and the donor advised fund being the largest and fastest growing financial vehicle for philanthropy worldwide is an interesting phenomenon where um, the financial vehicle is called a donor advised fund worldwide. So be it UK, Australia, Canada, Asia, they're called donor advised fund. In Raymond James, we call it the Charitable Giving Fund, and we refer to it as a CGF. So that's the nomenclature, just to be clear here. And it's a personal investment account or vehicle for philanthropy. And how it works is that you as the donor, the infograph below will make it very clear for you. So you as the donor donates, you get a tax receipt which is utilizable for the next 5 years. And this is how the CRA is really kind in Canada too, where you can utilize your tax receipt and tax credit dollars over the next 5 years. And this is where the true sort of planning comes into play, where if you've got a tax event such as sale of a business or sale of a secondary residence, this tax receipt can be utilized to offset the gains from such sales. So it's really looking at your personal plan from a really drone view to utilize philanthropy as a, a real strategy and almost as like a fantastic tool in the toolbox in ensuring tax efficiency and tax optimization. Now, how does this work like a private foundation? You can name your charitable giving fund account however you'd like. I swear we have one called Roses and Rainbows. It's quite fantastic. So you can really personalize it, name it as you please, just like a private foundation, and we take on all of the administrative work that's required. The charitable giving fund, then that is named whatever it may be, and we can use the example of the Sunshine Fund for this reason. And there's a real lack of sunshine where I am, so I'm thinking of the sunshine a lot. Um, so, say the Sunshine Fund, which is held within the Raymond James Canada Foundation, it continues to be under the management of Greg, who is the investment advisor on in your case, and grows as per the investment policy statement of the Raymond James Canada Foundation. Now, the main thing to remember here is that once donated, these are irrevocable assets. Indeed, you've got the tax receipt, and therefore they're irrevocable in nature. CRA would be coming after me and all of you otherwise if we did revoke those assets back to you. Once held in this example Sunshine Fund, it grows under the aegis and investment management of Greg, after which you can, and during the entirety of the course of it, you can grant out to causes and initiatives, registered charities in Canada that truly speak to you as a family, as an individual, as well as we can facilitate international granting. We do have some minimum thresholds of that, and I'll get into that in the next slide. So this is how this sort of vehicle works. The donor advised fund remains the same as a concept worldwide. And as explained, we call it a charitable giving fund. And to tell you another differentiator in nomenclature, a donation is something that you get a tax receipt for. So your donation into your charitable giving fund account, you get a tax receipt for that. What is then given out to charities are called grants. So you're granting from your charitable giving fund account. So that's a key important differentiation in nomenclature that you must keep in mind as we go on to the next few slides. So as mentioned, they're sort of extremely flexible. Whoops, I don't know why it keeps switching, but
Mhm.
it's extremely flexible and customizable, so you can name it whatever you'd like. There's also a huge aspect of confidentiality associated with donor advised funds. We, in fact, have a lot of private foundations that have collapsed into a donor advised fund because of the confidentiality and privacy aspect that is associated with the donor advised fund. All information about foundations and charities is available on the CRA. So, say you are a private foundation and you're granting out to 10 different organizations, you are going to get accosted. As you know, if you've donated ever in your life, you are going to get that mail. And just imagine if you have a private foundation, all of this information is publicly available. So, there is a little bit of fundraising strategy in North America that is a bit more aggressive in nature, if I may say so, just having worked in different jurisdictions. And I think that is a major reason why Canadians are choosing to set up donor advised funds rather than setting up their own private foundation. Indeed, not to mention the administrative and regulatory nightmare that it comes with. It's very simple. Our teams can set it up in less than a week. It's highly strategic. As mentioned, the tax receipt can be utilized over the next 5 years. Another aspect to remember is the legacy building aspect of it. Utilizing it for building that family value system or ensuring that the Raymond James Canada Foundation carries on your wishes after your time. And this is done through a process called a letter of wishes or naming a successor advisor onto the account. We also have the opportunity to sort of set up a fundraising portal. So it acts exactly like a private foundation. A fundraising portal is a website where people can donate utilizing credit card directly into your charitable giving fund account for a specific thing that you might be trying to fundraise for. And it's automated in entirety. Like friends and family can donate into it. The tax receipt is issued, immediately, and the monies can be then given to that particular charity of choice that the family might be fundraising for, or particular cause that the family might be fundraising for, or individual might be fundraising for. We can, of course, receive all types of donations, which is cash, securities in kind, and this is the real clincher because I'm sure Greg, being a fantastic, investment advisor, would have invested in certain positions for you in your personal accounts that have grown rapidly and has considerable amount of gain. When that gets donated, the fair market value of the donation is what is issued as a tax receipt. And they're actually tax credit, meaning you're subtracting the amount mentioned on the tax receipt from your tax owings. So it really is the most sort of effective way of donating. So even if you want to donate securities in kind to a charity, not to create your own donor advised fund, but to a charity, never sell your securities and then donate cash because you're going to be taxed on the gains. Always donate the appreciated securities whenever you do want to donate securities in kind. Third party, indeed testamentary. So, and Craig will speak more to this. in the latter part of the presentation on how you can utilize estate planning and your donor advice fund. Insurance, we accept a few products, specifically one-time premium pay products, and all of this. And I kind of almost relieve out the first point because it is the most important point, and I want to kind of stress on that aspect at the end of the slide is how cost effective it becomes. It's only a 1% administrative fee that is charged on a quarterly basis, and it covers the entirety of the administrative, legal, tax services that we do for your donor advice fund account, your charitable giving fund account. In contrast to a private foundation, you would have so much cost of accountant filing, legal filing, human resource personnel that you would have to hire who are educated enough to be able to ensure that your charitable dollars are being put to good use, and indeed administrative staff. So all in all, the 1% fee, comes out to be a really good price for anything that you might be looking to do from a philanthropic, perspective. How does this all work? It's quite simple because it's a give, grow, grant model. So to set up a donor advised fund or a charitable giving fund account at Raymond James Canada Foundation, the initial donation has to be 100,000, and that's our minimum bank account balance. You have to always maintain $100,000 balance. As mentioned, you can donate cash, liquid securities, insurance products of specific types. The tax receipt can be utilized immediately or carried forward up to 5 years. Subsequent donations can be made at any time at increments of 10,000 or more. And the charitable giving fund account can be a residual beneficiary in your estate, in your will. And Craig will speak a lot more to that in the coming up slides. How does it grow? As mentioned, it is held within your charitable giving fund account and under the investment aegis of Greg. It continues to grow there as it's invested, as per the investment policy statement of the foundation, as the risk profile of the foundation is far lower than that of you as an individual investor. So it's a little bit different from how you would have experienced your private investment accounts. But I am seeing about, 6 to 8% returns regardless on a yearly basis if I sort of kind of give you an average growth on all of the accounts that we do have. As mentioned, you can grant out to your favorite charities in Canada or internationally. For Canadian charities, they need to be registered charities in the country, and our minimum grant amount is $1,000. For international granting, we work with our international granting partner, and a minimum grant amount of $10,000 needs to go out. That's the only way we can kind of do it. And they need to pass the due diligence checks of our international granting partner as well as our compliance teams. There's also a 5% charge additional for international granting that is charged onto the charitable giving fund account. Now, with the help of your Raymond James advisor, you sort of, create your giving plan, and it can be annual, monthly. We can do recurring donations. So say you want to donate $2,000 on an annual basis to the Salvation Army, another $1,000 to the local food bank, a $10,000 to, I don't know, the Nature Conservancy of Canada. All of this can be set up in a manner where me and my team get to truly steward your philanthropy. And I think what happens during this time of the year is because you're looking at your personal income and you're seeing these tax situations and you're having to make these really quick year-end, like really snapped tax decisions. And my favorite thing to do is in my job is help individuals create their gifting plan and really help articulate the value systems that you as a family may have or you as an individual may have. And I'm seeing more and more individuals without children or same-sex marriages where they don't have anyone to pass on these monies to. So it's about creating that gifting strategy to leave a legacy after your time as well. And the question remains quite simple here. It is really, where do you want the money to go? Do you want it to go to CRA or do you want it to go to charity? I think that is really the question here, especially out west where we are. I'm based out of BC. I think most of the people on this call are in Alberta. I also do see a sentiment of like, do we want our tax dollars to go to Ottawa and then Ottawa to make a decision of where this money ultimately goes? So I have seen a lot of our clients and donors who I work quite closely with who want to see the change in their own communities, in their own provinces, or charities of their own choice abroad. It's a quite a clear decision in my eyes, other than federally to make a decision on whether the money needs to go to healthcare or to education. And you as individuals who have that sort of level of capital and wealth to be able to take the decisions for yourself. Where do you want to see the change in the world? This is just a small tax example of what I was speaking to earlier on donating in kind and the advantages of donating in kind. As you can see, the last line on this, the cost of donating $110,000 worth of securities. If you donated in kind, your cost of donation is only 58,900. Whereas if you sold and then donated cash, it's 70,944. And in reality, like the tax credit doesn't even apply. We just kind of tend to waste a lot of money. The capital gains tax on selling and then donating is 12,044. This is an example of Ontario, and it's a very basic example. Our website does have a calculator where you can calculate all of these things, and we will share that with you as well. So you can kind of work out your own little examples. And indeed, Greg can connect with you and create, clear projections on what is an applicable and best case scenario for your situation. Because indeed, every person has a different income level, different tax bracket that you might be falling in based on, what level of life you are at. And as mentioned, the reason I put the slide on my presentations is to really showcase the importance of donating in kind and not selling and donating because it's just not tax efficient. Over to you, Craig.
Yeah, thank you. I just wanted to emphasize that AMT. So maybe if we just go back to that earlier slide there, Peru. Uh, AMT is called alternative minimum tax. And this is, from an estate planning perspective, really, really a nice thing that CRA allows us to do. One of the nice things they do, which is not very usual. What alternative minimum tax basically says during your lifetime is that you can't, amongst other things, you can't gift too much to bring your tax down to zero. But in the year of death, and as long as it's what's called a graduated rate estate, you can offset 100% of your income versus only up to 75% during your lifetime. So I just wanted to emphasize, in case folks were wondering what AMT meant, that's what that means, alternative minimum tax. So it can be quite significant when you're looking at a deemed disposition of all your assets upon your passing. Okay, so if we go to the next slide, so estate planning. Like I just said, when you pass away, you're deemed to have disposed of all your assets on date of death. So, for example, if you have a tax-deferred investment such as an RRSP or RIF, that the entire amount of that asset gets added in full to your last year's tax return, which can put you in the significantly higher tax bracket, if not the highest. So your taxes are quite significant potentially on death. So any donation made on death, it gives you, like is mentioned, a charitable tax credit that can offset those big taxes. And those benefits can extend to 100% of your income realized and potentially eliminate all your taxes. So to the earlier slide, where do you want to gift money to the CRA or to charity where you have some control? For most people, that's a bit of a no-brainer. So for those of high net worth situations, or ultra or simply high net worth, it can be integrated into a holistic estate plan. So instead of being reactive, this is a strategic plan. Um, Donations can be made in multiple ways. It can be a bequest in a will of a particular dollar figure. You can gift life insurance in various ways, or you could do a direct beneficiary designation on your registered accounts. That can also result in a tax donation receipt as well. So in your will, how do you give? Well, you, like it's just mentioned, you can leave a set amount. For this example, $10,000 with no additional planning. For smaller amounts of money, that can be done, certainly. You can leave a portion of your overall estate. Um, if you're leaving 1 to 3 charities, I see that a lot in my type of work, where people in their will name 1 to 3 charities or sometimes more. Um, Now, one of the things that I see in terms of estate administration is sometimes wills get done when a particular charity is existing and they may cease to exist or amalgamate, and sometimes it can cause some problems, um, where we sometimes have to go back to court and have the court confirm an alternate gift under some legal provisions. So that could be a bit of a problem. The other issue with leaving those charities named in your will is that if you change your mind later on to change that gift, you'd have to go and get your will changed or do a codicil, change to a particular clause, for instance, if you do it that way. So there's a few drawbacks, but it certainly can be done. What I like about the donor advised fund to structure your giving, um, and as it says here, if you're leaving a larger sum to charity with multiple charities that may change often, they're really a great vehicle, because essentially what you could do as one example was set up the structure of the fund as a legacy donor advised fund, and then you do up a letter of wishes that you can change any time. So when you do up your will, you'll say, I leave a percentage or X amount of dollars to my fund, and it's referenced directly. But the charities that are going to get grants from those funds can change. All you need to do is change your letter of wishes before you pass away, as you find new funds or reduce or eliminate funds or etc. So it's quite flexible in that regard, and cost effective. And again, it can be done as a shell. You don't have to give during your lifetime, but you can do both. You can either give during your lifetime and on death, um, or you could just set up the shell. Um, or finally, establishing that charitable trust or a foundation, a private foundation. But as Peru mentioned, the administrative costs and expenses are can be quite significant, require a staff that you would have to find suitable individuals to run it properly. Why not just consider a donor advised fund where you pay the 1%, and it covers all that uh, overhead. Okay. Is this my slide, Peru? I guess I'll assume it is, unless you jump in. Um, so charitable gifting, certainly can be part of a holistic financial and estate plan. And so, what I do in my work when I talk to folks is, do they have a charitable philanthropic intent? If they do, it's quite simple to set something up through the foundation. I've experienced in my work working with a couple of foundations anyway, and this is by far the most uh, simplistic and fast way of gifting, and quite flexible. Um, and so, um, and your personal values and the legacy your values might change, and you could change it any time. So there's flexibility, it's effective. What I generally will do with clients is we'll sit down, look at their portfolio, and I think one of the examples I've seen is people with, that may have bought Microsoft or Apple shares when they were really, really low. Um, and there's we call a pregnant gain on that, on those particular stocks. You could donate it, avoid the capital gain and inclusion rate, and get the full value of it, and gather an immediate tax receipt, which could help on your taxes either during your lifetime if you set it up, do it that way, or post death. Um, and then I work closely with Peru and folks from the Raymond James Canada Foundation to, explore some options and provide that advice and guidance. So if you are interested in charitable gifting, certainly I would be happy to speak with you along with Greg and Peru about strategic gifting and some options available.
I mean, ultimately, I think the point of sort of putting this together and, working with Greg on increasing the knowledge base amongst his clients is to just achieve greater impact, no matter what kind of a funder you might be, individual, corporate, family. It's really to help you achieve that change that you wish to see in the world and create and articulate a strategic gifting plan for yourself or for your corporation or for your family. Right, we have some time for questions. So I guess, Greg, you can sort of filter that for us.
Yes, thank you guys. Really great presentation. Always learn something new about philanthropy every time I see a presentation from you guys or we go through this. So re really good. I'll just reiterate to those watching, there's a Q&A button at the bottom of your screen. You can type in your questions and we'll get those answered for you. But I think you guys did a really thorough job of kind of covering the whole landscape. One question that came to mind for myself is many people do they're familiar with giving to charity and receiving a tax receipt, and there are some people with foundations who are doing that already. And you covered the donor advised fund and some of the situations where that's an advantage. So you'd mentioned a traditional foundation that wants to become more anonymous. And then Craig had mentioned the sale of a large asset, such as a business, and of course the making it part of the estate planning process. Are there any other triggers or things that people should maybe keep in the back of their mind when they're thinking about their finances or just going through life that would prompt them to start thinking about charitable giving or questions they could bring to their accountant to see if different strategies are suitable for them? What are some of the high level patterns or situations that arise when someone should start thinking, maybe I want to give some money to a charity locally that I care about as opposed to the CRA, as you guys have mentioned?
I can tackle the first bit. So it's really about, I think, it's values driven, right? Philanthropy and giving is highly values driven. If you are already giving in your life, it's truly about organizing that giving. So if you're giving to five different charities on a yearly basis, and you are anyway paying taxes as CRA, it's about speaking with your accountant and looking at it from a larger, holistic drone view perspective of your personal finances and utilizing a vehicle such as a donor advised fund, a charitable giving fund, as a tool in the toolbox for mitigating tax events in the future. And tax events can range from, sale of a business, like we mentioned, sale of a secondary property, immense inheritance coming through. And then what do you do with that? So it's really about ensuring, mapping, and planning for the future and utilizing philanthropy as a tool. When we talk about transferring wealth from one generation to the other, so I've seen most individuals are quite, we are in that phase of creating wealth, and then we create a lot of wealth, and then it's about preserving the wealth. How do we preserve this wealth? Then most individuals get quite obsessed about transferring the wealth to the next generation. Canada being quite a high tax regime, transferring every dollar that you've made to the next generation is impossible. A way to do it is also charitable giving. So if you create these sort of vehicles, the next generation then becomes successor advisors onto this account and then take on the family value and legacy building, utilizing these capitals that are, this capital that is set aside for philanthropy, set aside for charitable giving. And it becomes such an amazing family building piece almost where different generations are speaking to each other on, okay, what should we give to this year? Right? Also, an amazing tool for individuals that don't have children, because who are you going to pass on all of this to? I think that's the other thing that we are seeing a lot of in Canada, where we have individuals with no children or same-sex marriages as well. Craig, I'll let you opine a little bit on estate and planning considerations.
Yeah, I think one of the things that people tell me when they sign up for this is that, you know, the ability to create a legacy. Uh, you know, what really appeals, I think, to people is you get this immediate tax receipt, right, from an estate. Of course, you'd be passed on, but at that point, however, you're leaving a legacy, and so your memory lives on. If you don't do this and it ends up just getting taxed and going to CRA and distributed, then it's, your memory tends to fade. But a legacy fund, I mean, to me, that's the most appealing thing because, for example, you could create even a an individual scholarship legacy out of your fund and set criteria for that for from your alma mater, for example, for underprivileged folks that want to go to school, for example. So you've got lots of flexibility. Um, you don't have to wind it up in a certain period of time. CRA does require a certain amount being gifted every year, um, but it's strategic in that it can continue to grow and be a legacy fund forever. And so it is an investment fund for charitable purposes. And every year, and you could, of course, remain anonymous, but you could also name it however you'd like to. And that lives on beyond you. So your wealth just continues to grow. And yes, of course, there's fees, administration fee on it, but you're also allowing your trusted advisor to grow that wealth and still maintain um, its perpetual existence over many, many years or potentially forever, or you could draw it down over a period of years. It's really your choice. So it's such a lot of flexibility with regard to these funds that I think they're really, really appealing. Um, I've seen, of course, we never know when our due date is, of course, but I've seen so many situations as an estate administrator where someone has built up a tax deferred investment that they just turn into a RIF, for example, at 71 and suddenly pass away with $1 million in a RIF. Well, that's going to mean a tax liability of, upwards of, well, plus 50% straight to CRA. Why wouldn't you want to gift it to somewhere in your local community, for example, fitting your values where you know that money is going to go at least partially anyway of where you want it to go rather than just to Ottawa. So yeah, to me it's they're a great vehicle. Um, but it does require an analysis of what money do you need and what don't you need. And if you're situated in life where you have money that you'll never spend in your lifetime, why not leave a legacy, right? So yeah.
Perfect. Thanks so much for that, Craig. And Peru, there's no more questions coming in. We're almost to the top of the hour, so I will let you get back to your day and our guests back to their day. If you enjoyed the presentation and there's someone in the family you think would like to take a look at it, there will be a recording available as well. So just let me know via email and I can get that out to you so you can share it. It's not just reserved for clients. We're more than happy to share this with everyone. So thanks for those that joined today, and thank you to our presenters. Hope excellent topic getting into the giving season here with Christmas and the holidays just around the corner. So thank you guys so much for your time. I'll let you get back to it, and thanks for joining.
Thank you.
Thanks,
Bye bye.
everybody. Bye now.
Take care. Bye for now.